Well, what we're seeing is some of the issues which were dampening the dollar earlier in the year start to be appear to have abated a little bit. Some of the geopolitical risks that the markets were concerned about, in particular in relation to North Korea. It seems as if that concern has lifted as the summit gets closer. And also in terms of trade and protectionism, I think that was a factor which was keeping the dollar low. But for the time being, that issue as well seems to have calmed down. There were the talks that we saw between the US and China over the weekend. It didn't materialize in anything, but I think in terms of the ability to distract and put downward pressure on the dollar, I think that the removal of that has helped the dollar to recover. And some of the correlations in terms of interest rate differentials, which historically have been quite strong for the good for the dollar, those are now once again performing and helping to keep the dollar supportive.
Yeah, and speaking of correlations, Tim, the strong dollar doesn't usually bode well for oil prices, but a different story here because we're talking about geopolitical factors moving the oil markets today. What is your expectation here? How closely are you watching this uptrend as it impacts your investments?
No, clearly the oil story is one of the bigger ones in terms of the backdrop for the GCC. Oil prices in excess of $70, clearly welcomed by governments and oil-producing countries within OPEC, but that also coming up against pressure from other parts of the world, the United States in particular, sounding off recently about the surplus in terms of oil supply around the world. Donald Trump tweeting about that a week or so ago. So I think as we move towards testing perhaps a 75 to 80 range for the oil price, I think those kind of sensitivities have to be borne in mind. But clearly the dimension which is pushing oil at the moment, as you mentioned, is the political one. And the upcoming decision by President Trump over Iran on the 12th of May.
Now, Tim, you're talking about the political situation. I have to ask you about what's happening in Turkey, because as you know, there are going to be elections coming up towards the end of June, really to make this an executive presidency for Mr. Erdogan. What about the Turkish lira? What's your outlook for the lira?
No, the lira clearly suffering from the question marks about policy and how the central bank responds to an overheating economy. The strength of the economy has been seen last year in excess of 7% growth, inflation pressures, but to some extent an appearance of a reluctance to take measures to try to address those inflation pressures and also address the pressure on the currency. There has been a rise in interest rates recently. I think that will help to stabilize the situation, but clearly until the election is out of the way, there may be more uncertainty, which will keep some of the pressure there.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.